Google for Q2 of 2026.
So Google had a little bit of a mixed earnings results. So we'll just kind of take a dive into it, go right in. So the article does mention that Alphabet, aka Google, reported better than expected revenue for the second quarter on Wednesday, this past Wednesday, which is driven by growth of 82% in its cloud business. But then the stock tanked. Oh, I shouldn't say tank. It sank and extended trading as the company lifted its forecast with capital expenditures. So let's kind of just take a look at that. First two metrics we want to look at that we usually love to see are earnings per share and revenue. So earnings per share is at $2.85 adjusted versus $2.89 expected. So a miss there by 4 cents. But then revenue, they did a win. They said revenue is at 119.8 billion with a B versus 116.93 billion. Beat there by about a little under 3 billion. So beat on revenue, loss on earnings per share, but kind of like the intro was talking about, the CapEx. This little paragraph mentions it. It says that Google expects CapEx for the year to be at 195 billion to 205 billion, which is up from 180 billion to 190 billion, which is forecasted previously last quarter. The company is pouring money into artificial intelligence infrastructure to keep pace with booming demand. And that's kind of like the theme, is that they're trying to keep up really with just AI like everybody else is. A lot of things that are obviously squeezing them, cost of stuff, chips and things like that. They also mentioned pressure from China, because China also has their own AIs, but they're also weighted differently, so it's cheaper for them compared to how Google's doing it. They also had a delay for their 3.5 Pro Gemini model, which obviously saw some blowback as well. Not the greatest quarter for Google. It's just kind of tough. They're just trying to keep up essentially at this point, but they did beat on revenue, which is good. Earnings per share was down a little bit. Overall, I would just say it was an okay quarter. Nothing too crazy.
And Tipranks is going to say that it's still a strong buy. You have 31 buys, 5 pulls with 34% upside. Average price target of 427. It's currently trading at 319. So still, it looks really good, even though I guess you could say collapse 7%. It's up only like 1%. So when we take a look though at my DCF is going to say something very interesting too, because after today's collapse, if we this is Wall Street forecast. Wall Street is going to say that it's undervalued still by 12%, and historical growth is going to say it's a little overvalued by 13%. I think personally it's efficiently valued. I think it's fairly valued. The next thing, which is simply Wall Street, and this is the big concern too, is the negative free cash flow. So right now we're at 53 billion. The next 3 years, it's going to be 32 billion. So it's certainly going to go down. You could see here this period of negative free cash flow, and a lot of analysts are pricing that in now because they are cautious of that. So that's why the sudden sell-off, people are a little bit shocked about that. When we take a look, the net income too of the company, the net income is, of course, is going to be very good. You have 2022 is 59 billion, 2025 right now, roughly 2025, 132 billion to 244 billion. Lastly, where Google stock is currently trading at, if you do high and low. So we have that they're 318, 319. Their 52-week range is 188 on the low and then 404 on the high. So again, I don't think it's too big of a deal. It is Google. I think they'll be probably just okay.